And welcome to today's analysis. Okay, on today's analysis, we'll be using World Trade today, and of course, we are starting with FX volume 20. Today is 30th of January 2025. Jesus, 2026. Sorry for that. Anyway, let's just mark our structures. Okay, just taking out this coins one. So that means we are likely to see a bearish trade. Let me take this a little bit above so I can just easily pick out this. So are we seeing bearish trade continuing? Going short here, putting stop loss right here. Uh, this is actually looking very tempting, but then let's going short here. Stop loss is definitely supposed to be here above this level, but then I'll take profits down. Now, as you see, you put your stop loss. It's not really meaningful. Why? Because the market can choose to come and test this again, then still continue moving in that direction. So except you want to see a pullback, so I'll be taking this trade. Except I see a pullback breaking this way, they're unable to break above that, unable to break above this structure, somewhere here, they're continuing, then I will go short on it, my stop loss at that new level. So that's what I'll be doing. Alright, so that's what I'm expecting on what's it called? On FX volume 20. Okay, just a moment. I'm trying to. Alright, good. So go to the next one, which is break 600. Someone actually drop a comment to analyze some pairs, which they will be done later on in the day after the first analysis. Let me just check what we are asked to actually analyze. Okay, we have to analyze FX volume 60 with 600 and book 600. I think they are definitely going to be analyzing 600, and that's what they are doing right now. Okay, so going to H4. So I don't know the person. I think the name here is trade something trade 1122. So yeah, it's book 600. Now book 600 is actually a bearish market, but now we're having a retracement back, but then we are waiting for a change of structure. Why? Because for us to confirm that it's ready to change of structure on the bullish aspect of it, is if you can see a continuous series of the market move on the higher time frame. For example, that H4, you want to see the market giving us now. Remember, it's unable breaking down here, they may be stopping here, unable to break below the stopping around here, then breaking above this again on the H4. If this can happen on the H4, then that means you can see the market is likely to start changing our structures. Otherwise, we are still very much bearish, so still waiting for bearish trade on both 600. So going to 15 minutes time frame to see change of structure on the bearish aspects. For now, no change of structure on the bearish. The change of structure having here is still on the bullish because they actually broke above our previous high, breaking above this level. Then you can see this is there. So we want to see a change of structure on the bearish before we think of going short on break 600. So for now, fingers are crossed. We are not placing any trade on break 600. So going to gain, so we are going to gain. I'm using gain 400. Then we go to H4. Okay. So since you're already seeing some bearish move, changing momentum to the bearish. Let's go to 15 minutes chart to confirm it. Now, I'm waiting for this candle to actually close bearish. If this candlestick closes bearish, then I'll be going short. Or if after this I see a bearish candlestick close, then I'll be going short on that. Let's assume this candlestick, what's time? This is actually 57, so in 3 minutes time this will be closing. So this might not actually close bearish, but if the next candle actually closes bearish, I'll be going short on that. My stop loss is going to be right here. So let's wait. I'm just waiting to see the close of this candlestick. After that, is for the next one to close. The next one closes bearish. I go short on the stop loss and my take profit is minimum of 1:2 risk to reward ratio. So that means my stop loss is going to be minimum of at least this level. That's where my take profit is going to be. Stop loss right here. Then my take profit will be there. Remember, it's after this candle closes and I have the next candlestick closing bearish. That's it. Go to the next one after gain is pin 400 and then still going to H4. Alright. It's actually giving change of structure on the bullish. Remember yesterday we said we want to see change story back to the bullish, but that was actually the case yesterday. But because it has been bullish, they want to see change of structure back to the bullish. This change of structure, we really didn't see this. I'm sure in the lower time frame have shown us signs of change of structure. So now what we're expecting to confirm this, remember on the H4, that's going to be actually validate this previous level. So you want, let me just reduce this a little, then take this off. Alright. Have we tested it? So if this bullish trend is to continue, we want to see it breaking above this, a retest, then continue on the bullish aspect. So this is what we are expecting for it to happen. But then let's still go to the 15-minute chart. Let's say if we are seeing a retracement back to this level, the trend for now is not really confirmed. We're actually breaking below our previous level right here, internal level still. But then this candlestick actually validates it. So if we are going short, stop loss is still going to be here. So for now, I'm not taking any short trades on PainX 400, but I'll be going long on it if I can see the market breaking above this and testing this for me to go long. But for short trades, I'm not taking any short trade on it yet. Yeah, that's that for PainX 400. So going to the next one, which is flip. So this is supposed to be a blast one, but then we'll be analyzing based on the comment section. So page 4. Wow. Not sure I'll be taking any trade on flip. Not sure I'm taking any trade on flip until this two level gets taken out. Either this level gets taken out on the short or this gets taken out on the long. For this level, I'm not taking anything because the market just moving sideways, so I'm not doing anything in this zone. Alright, so go to the next one, which is going to be part of what we're giving, which is FX volume. And we're using 60. Okay. FX volume 60 seems to be a little bit not stable yet. Now the major buy trade comes up if this level gets broken. That's the major buy trade, and the major sell trade comes up if this level gets taken out. But then why in this zone, you want to see change of structure either on the bullish or on the bearish. But then based on what you are seeing right here, there is no opportunity to sell because if you're selling or you're buying right here, there's high chance that you might actually be hitting your stop loss. Why? Because if you let's assume maybe you bought somewhere around there, then maybe your table might be open, then this comes down and take you out. So I would say stay out of the FX volume 60 so long as it's still in this zone, except you have something like the market gets to this previous level, get to this level, then start showing signs of the market likely to continue, they can go long and put your stop loss right here. Remember, if your stop loss is the minute that if the market should go below this, that tells that there's high chance that the market is likely ready to continue on the bearish aspect of it. So that's that for FX volume 60. So break, as for break, you've already analyzed break, so there will be no need for us to analyze break again. So if we go to switch, switch 600, this is actually a bearish market, but then you're having a retracement too. So this retracement, is it giving a change of structure yet? No. Change of structure not yet confirmed. You can see when they got here first. let me zoom this out. Let me just let me zoom this out. Okay, so you can see when I actually got here for this rejection followed by this, would have thought maybe this was supposed to be a short market, but then there's no confirmation still because there was no any pledge can fully close below this previous rejection right here. So that was that there was no confirmation, but you can see this again moving straight into that zone. So are we actually going long? Are we to go long on it? No, not yet. Why? Because the short is actually still valid. The short is only taken out if this is our high right here. This is our next level of high. So if this market actually moves, let me go this way. It's actually moved into this level. There's a high chance that it will return back to this level. Then if it gets to this level and move above this, then we can think of going long on this second one. Not in this zone. Now if I actually move into this zone, then remember there are sell forces, there are a lot of bearish pressures. They can actually get somewhere around here, then start moving. They can get somewhere around, they start moving down. But if it to make it to move above, they can say there's no any major what's it called bearish what's it called momentum around this level. So if you actually break above this, it tells it, then we are ready to go long on that. Otherwise, so long as I see this zone, let's wait until we see it go below the first to go short on it. So if you actually see any movement, maybe we see this already moving to this, then we see this, then unable to break above this previous high, stopping here, then showing signs of short, going short, then we go short on it, and of course our take profits is going to be these are targets right here. Let us go long, go short here. Stop loss is going to be below, above that rejection, then stop loss is going so if it's label is going to be this level, this is going to be our next target. Remember this is H4, so that's what we'll be doing next. That said, I wish everyone a profitable day trade ahead. Please and please always ensure you play safe and don't skip more than you can afford to. If you're copying on my trade by using the link in the description, please adjust the loss side of the loss side that suits you.